Digital risk does go through a bit of fluctuation. Actually, digital risk performed better than what I anticipated for the quarter. And as I shared the numbers, if you look at Q4 versus Q4 of last year, they have done exceptionally well. Overall year also, they have done very well. But if you look on sequential basis, there has been a decline. But that's the feature of the mortgage business. You will see some, volatility. We are working to reduce the volatility. We are closer to solving that than what we were in FY15. We still have work to do. So the business is not in a bad shape or whatever, but the volatility is an inherent aspect of that mortgage risk and compliance business.
Okay. So coming to you, you have provided for 32 crores as an exceptional loss for reassessment of future profitability. So has been provided for this quarter, or is there a lap over that we'll see in the coming quarters as well?
The loss exception which has been provided, it is for the future losses expected on this particular contract and for the next 3.5 years. So that has been provided. So you will, going forward, you will not see any losses with respect to that contract.
HP channel is down from over 66% last 5 years back to a quarter now. I know we've been asking you this, but with sort of a minimum revenue guarantee from HP as well post the Blackstone deal, how do you see that panning out in FY17? Will it be on a downturn? Should we be preparing for another 15 to 20% decline in FY17?
I expect it to stabilize and stabilize at a level based on minimum revenue guarantee and thereabout. And I expect the stability to happen sometime in Q2. I mean, it can spill over to Q3. But I clearly see FY17 to be a year of stability for HP business rather than the decline rates that we have experienced between 21 to 23% over the last 4 years.
All right. Also, the direct international business has been the growth pillar for you. How do you see that panning out in FY17? Also, because you will have to offset the decline as far as the HP side of the business is concerned.
We are seeing a very good traction in the direct international, and with the good TCV wins in FY16, it gives us the foundation for a very healthy growth in FY17.
All right. Also, want to get sort of a macro view as far as the order book is concerned, and also the deal pipeline. Is it healthy for the coming financial year?
It's very surprising. I see deal pipeline to be healthier than what it used to be. So I don't concur that there is a problem with the pipeline. The quality of the pipeline has changed. It actually goes back to the issue: are you a focused company? Are you specialized? Are you trying to be everything to everyone? So when you become focused and specialized, then what it does is you bring a value proposition, you collaborate with customer intensely, and the quality of your pipeline improves. I don't see pipeline being a problem, especially in direct core. We have a healthy pipeline, as Surya mentioned, healthy TCV. And so I'm kind of bullish on direct core beating the market growth rate in coming year as well.
All right. Two things, Surya, to you. In terms of margins, what sort of an improvement will we see starting Q1? And also cash on books, and what's the utilization strategy like?
Yes. So we had earlier indicated in the second half of FY16, we would be in the band rate of 13 to 15%. And we are more or less been around that. Going forward for FY17, we are clearly looking at good improvement in the margins, and the band for the first half, we are looking at anywhere between 14 to 16%.
All right. Lastly, when the Blackstone deal was announced, I want to now know, it's been quite some time, in terms of, is there a revenue milestone that you're looking at, or a predictable earnings trajectory post the deal with Blackstone?
See, any financial investor would have a financial model. That's why they have invested. So does Blackstone. And it is a joint exercise between Blackstone and Mphasis to ensure that all our shareholders, including Blackstone, gets the return on their investment. We are committed to it. So stay tuned. Once the transaction closes, that innings will start. So this is, I guess, pre-innings commentary that we are having. And we feel confident about what's ahead of us.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at ET Now Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ET Now.